Hi there. If you're algo trading, you're always looking at entries, exits, position sizing, all sorts of things. Today's video, I'm going to talk about exits and what can beat simple stop and reverse exits. Can anything beat them? I'm champion trader Kevin Davey, and let's get started. Hi there, and welcome to my backtest report on algo trading exits part 2. You know, the problem with exits, and I mentioned this in the first video, which you can find on my YouTube channel. For most people, exits are an afterthought. Everybody's always talking about entries, and nobody thinks about exits, or they put very little thought into it. Well, I decided to kind of look at a lot of exits and see how much do the exits actually matter. And I think what you're going to see is the exits do matter quite a bit. And you can turn otherwise good strategies really bad by using the wrong exits. So as I mentioned, I did 567,000 backtests, and actually more than that, but I tested a lot, and it took a long time, and it was painful, and I had to restart computers sometimes because I'd get internet connections going down and stuff. So it took a while to put this together. But in part 1, I actually tested some what I would call simple exits, things like stop and reverse and just a simple dollar stop loss and those kind of things. And in part 2, which is this video, I'm going to go into intermediate exits and also complicated exits. And let's see, can those beat out what was the best exit in part 1, which was just a simple stop and reverse exit? I don't know. So I'm going to be using TradeStation to do my testing. That's what I do most of my system development work with. It's also what I do my trading with. So it's a pretty good platform. It's been around a long time. It was one of the pioneers in systematic algo trading. They didn't call it algo trading back then. They do now. So let's test some exits with these entries. So I'm going to use 5 different entries. I'm going to use a simple momentum entry, a breakout entry, a simple moving average crossover, a Bollinger Band entry, and a volatility entry. These encompass quite a bit of different types of entries, and more or less they're what a lot of people do. So they're pretty good to test. And so every exit I'm going to look at how they perform over these 5 entries. Then I'm going to look at a whole bunch of different markets. I'm going to look at 40 different futures markets, and that's in 6 different sectors. So pretty much just about any kind of futures that's traded in the US, I'm going to be testing it. I'm going to use some different bar sizes. I'm going to go from 60-minute bars up to 1,440-minute bars, which are daily bars. And I'm going to run the test for 10 years. So it's going to be a pretty exhaustive test. Also, I'm going to include slippage and commission. You know, that's something I always do because I always want to see what the impact of slippage and commission is. And then to determine what the best result is, hey, we could argue a lot about what's better. What's the best metric for telling what a good system is? I'm just going to use 2. I'm going to use return on account, and I'm also going to use the number of cases with a really high net profit. And that will give me a good idea of what exits produce high profit cases and also which ones produce a good return on account, which also includes drawdown. So they're pretty good metrics. I won't say they're the best, but we're going to use them for this. And of course, your results can be different than what I got. Why? Well, because you're going to be testing different. Okay, if you like what you've heard so far, please give this a thumbs up. It's a small favor, but getting a lot of thumbs up gets the exposure out there and has other people interested in watching this video. So just give me a thumbs up right now. I'm watching. And if you really like this video, subscribe to my channel. You'll be notified of future videos. And if you go to my website, you can get a free algo, free trading algo that you can trade yourself, or you can tear apart and examine and modify and do a whole bunch of stuff to. Okay, so after part one, where did we stand? Well, the quick takeaway after part one was the stop and reverse entry was the best. You know, it beat out all the other ones. It beat out dollar target, ATRs, time-based. Stop and reverse. Pretty simple. So now in this test, I'm going to look at complicated exits. Can those beat stop and reverse? I don't know. I hope so. So here's the first one I looked at. It's a trailing exit. And basically, it just kind of follows your max profit. And it always stays, say, $2,500 off of your max profit. So it trails. So if you're in a good trend, you're always going to have that stop trailing about $2,500 down. And obviously you can vary that amount, but that's a simple trailing exit. And then I also tested a break-even exit. And that one, once you hit a certain amount of profit, you make sure you never go below zero before slippage and commission. So it's a break-even stop. So you're at least assured of having a break-even trade. A lot of people like those. So let's test them. We're also going to test at the same time parabolic exits, chandelier exits, and yo-yo exits. I'm not going to go into too much detail about what they are other than to show them. Parabolic exits follow the price, and as time goes on, they start getting tighter and tighter. And they use a parabolic formula to do that. So they're loose at first and get tighter over time. The chandelier exit kind of hangs down for a long trade from a recent high and follows the price up as you get into a trend. And then eventually when the price breaks below that, that's when you exit. So it's kind of a neat kind of twist on a trailing exit. And you can see it just kind of follows along with the price. Then we have the yo-yo exit. And the yo-yo exit's kind of unique because it just works off of the most recent close. So if you get in a severe downtrend, if the yo-yo isn't engaged because the volatility is not that great, you could lose a lot with it. So it's something, an exit you want to use with some other exits. But the white line in this chart kind of shows you what the yo-yo exit would be. And you can see it goes up and down, but it basically says, hey, if I have a really bad volatile day that's against my position, that's a good indication it's time to exit. Something's wrong is what it's saying. Okay, so that's the yo-yo exit. So let's take a look at the results. Return on account on the left and the number of profitable cases on the right. And you can see in order, break even and trailing, they do better than the parabolic, chandelier, and yo-yo. So actually there's probably three categories here. The stop and reverse and break even, yeah, they do close to the same, although stop and reverse is better. Then you have the parabolic and the trailing. They're kind of like middle of the range. And then you have some bad ones, the chandelier exit and the yo-yo exit, which that kind of surprised me that those two were the worst, but that's the way it came out. So when you look at all the exits that I've tested, including part ones, you can see the stop and reverse on the far left is still by far the best. And then the chandelier, the yo-yo, and the ATR stop with a target, those are the worst. So those would be the ones you'd want to stay away from. So that's my conclusion. Again, stop and reverse is the top of the peak, and it's defeated all other entrants. Okay, so I wanted to try a couple more things before I said, hey, stop and reverse is the best, because I still don't believe it is. I believe there's something else that could be better. So then I did what's called entries as exits. And there's another video on my YouTube channel you can watch on that. But in this case, I just tested two of them, a channel exit and a moving average exit. So if I'm long, if I hit the lowest low of a certain number of bars, I exit. That's the channel. In the moving average, if there's a cross below a certain moving average, I exit the long position. So they're technically based. They're not really based on your current dollar or profit, you know, that in your current position. But let's see how they work. And the results, not so good. Again, the stop and reverse just kills these two. Now, maybe it was the ranges that I chose for the parameters. Maybe it's just these are terrible exits. Maybe there's some other entries that would work better as exits. I don't know. But in this case, stop and reverse won. So when we look at everything together, plotted on a chart, the top one's return on account, bottom one's the number of profitable cases. Again, stop and reverse in both situations is the best. Okay, so I've tested a bunch of stuff, and return on account's always the best. So next, I thought, hey, I don't want to just have stop and reverse being the best. What else can I test? So what I decided to do was take the best ones. Dollar target, break even stop, and dollar stop. Those were the top three after stop and reverse. And I thought, well, let's combine them. Let's see what a dollar target and a break even exit do. Can that beat stop and reverse? And so on. So you can see I tried all these combinations. So it was 6 more exits, a bunch more testing. What happened? Well, they're highlighted in yellow, and you can see they didn't do that well. You know, the dollar target by itself and dollar break even by itself were better than when you put the target and the break even together. Go figure. So nothing still beats stop and reverse. So the stop and reverse, and it keeps getting attacked, and yet it still is the best. And you can see the same thing holds for number of profitable cases. So it kind of just confirms what we're seeing here. Again, when you look at them all, stop and reverse is the best. And it's getting a little tiresome with stop and reverse. I want something to beat it. So I started to think, well, what could beat a stop and reverse exit? Well, what if you did the stop and reverse and you just did it quickly? You know, with the exit, you did a little more quickly. So here's a graph that just shows stop and reverse. You're either long or short. Well, what if, you know, a few bars before you reversed, you just exited your current position and just went flat and waited for the next signal in the opposite direction? What would that do? What it would do is it would create these dead zones that you see on this chart, where there's a certain red area where you've exited the one position and now you're waiting to take the next position. So I thought, well, maybe you're kind of front running the stop and reverse. I don't know. But it felt like maybe it would work. So what I did was I just added these two bottom lines to the code, and you can see the bottom line say, hey, if you're short and you hit a highest high of 5 bars shorter than your entry, that's the -5 there, then you either buy to cover, or if you're long and you hit a lowest low, then you sell. So I thought that might give a good test and a good run for its money to the stop and reverse. Okay? And I just picked 5 out of thin air. Maybe it's the real best number's 1 or 2 or 10. I don't know. But I thought 5 was a reasonable number because this input variable I was running at 15, 25, and 35 for a length. So that would mean if you were running a 15 bar one, well, now you'd exit at a 10 bar. So it would exit 5 bars earlier. And I thought maybe that would help the situation. So we look at the results, and it doesn't really work. And in fact, the top 3 exits, I tested all these with it just to see if that would work with any of them. It was worse in all cases. So it was worse with just the stop and reverse. It was worse with the dollar target, and worse with the break even. So not very encouraging. So I thought maybe this is just because it's a certain entry and some of the entries might like it. So I decided to look at all the entries by themselves. And this might be a little hard to read, but basically it says it's always worse. This fast reverse, or this fast stop I should say, and no reverse doesn't help things at all. So this didn't work either. Maybe it was my fault. Maybe I shouldn't have picked 5 for the offset. I don't know. But 5 seemed reasonable. That's what I tried. Maybe you go and do it yourself and you try a different value. Maybe you'll get better results. If you do, let me know. I'd be curious. So, again, the stop and reverse is the best. It's just beaten every single exit I've tried. And usually it beats them by quite a big amount too. And if you go back to the first video, you'll see that stop and reverse does well regardless of market sector, regardless of bar size, regardless of entry. It's almost always the best. So, if you like this video, please give it a thumbs up. Do me a small favor. I would really appreciate it. Don't forget to subscribe to this channel. You can get your free algo by going to my website. And just remember, as you're testing exits, just start with stop and reverse. See how that works and then go from there. That's the simplest exit. It also, from what I've seen, works the best. I'm Kevin Davey, and thanks for watching.